Hello traders, Gaurav this side. From today onwards, we are going to start a new learning series related to market. Today we will discuss about the topic false breakout, or we can say it is also known as bull trap. So let us learn what is false breakout or bull trap. Before starting, I want to just convey the message which from the experience of very good and renowned trader Mr. Jesse Livermore. What he always says, markets are always right. As written here, markets are never wrong, opinions are often. So we need not to argue with the market. Whatever market is trending or in whichever direction price is moving, it is always right. So markets are never wrong, opinions are often. So you let's start. What is false breakout? So the definition is given here. So no need to read it and just we will jump to the topic. As you can see in the right side of the chart, this is Asian Paints chart. It is I am just showing this chart for your reference. Look at this big huge volume candle, this candle, and look at this volume. Here volume is also high as compared to the previous bars, and this candle at this candle this Asian Paints has made lifetime high. But if you have bought it here, then it would have resulted in this loss, huge loss. So one lot of this Asian Paints have caused you lot of pain. So this is what I call is phase breakout. So we will discuss some more example in the upcoming slides. But by false breakout, what I mean to say is there is a range breakout of it may be 52-week high or lifetime high or a previous consolidation range breakout. But after that, after breaking this resistance, you can see this resistance is here, this resistance, this after breaking this resistance, price moved upward, and on daily, this is the daily candle. On daily chart also it is closed above well above the resistance, and volume is also high. So what traders will do is, who have taken position at here would be in huge loss now. So how to avoid it and what to do, what are the ways to identify it is a false breakout or not, we will learn in the upcoming slides. Now let us learn from the examples of false breakout. It's better to learn from the examples rather than the theory. So let us go ahead and move. So what I will be discussing is the charts of Asian Paints. So as I already discussed this one, this is no need to repeat it again. Let's move to the next. So this is chart of Gujarat Gas. Recently in this August month, there was a good news flow in the this oil and gas sector. So here this Gujarat Gas have given a good breakout at level of 732. This is also lifetime high for the Gujarat Gas. After that, this moved a bit, but see what happened next. A big red candle, and after this, it has broken the low of this candle. After that, it has just moved down. Think about that the trader who have taken the position here. One lot of uh, Gujarat Gas have given a lot of pain to the trader. So we cannot avoid this. False breakout. If we consider, some traders have view that you have to see the volume. See this volume is also very high as compared to these. So this breakout is good. Here also at this breakout point, see this volume is also good. So considering this volume and price action, everyone had have gone long at this position. This place would be in huge loss now. Now let's move to the next example. See, this is the chart of Apollo Hospital on daily basis. It has just closed well above this resistance, previous resistance, and after that it opened gap up, but could not sustain this huge candle, 8 to 9% move in a single day, and which have eaten all this price action and gain of this move. So this huge candle is enough to give the pain to the trader who have gone long on the day before, prior day here. So what I want to say is, before going long or short, you need to see the entry, risk reward, and all those things. Let's discuss in the next upcoming slide for this what is risk reward and all. See, this is the live example of recently Alembic Pharma has given breakout at level of 120. It, look at the volume, look at the size of the candle. It has broken the consolidation of almost 6 to 7 months, but after that this rejection, price rejection here, 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 and after that it's just simply moved down and would have caused lot of pain to the traders who have taken long position here, here, and still holding. Now you can see here currently still it is taking resistance at this zone, which was a previous resistance zone above which this breakout has happened. So still those have taken long position here are not in still in pain and are not able to decide where to go. So these kind of things happens regularly in market. False breakout we cannot avoid, neither we can avoid nor we can decide it is a false breakout until unless it has happened. How you can avoid? See these volumes are huge. So this price also moved around 10 to 12% in a day. Next day also it has moved around 5 to 6% on the closing basis. But after that, a few months of consolidation from May to just July, August. After that, price just came down and broke the previous support region. This one here it took support, here it took support, here it tried took support, but after that the price has just moved down. So let's now move to the next example. This is chart of Lupin. See this after here also in pharma sector in May when all the pharma sector stocks are moving up. Lupin also gave a good breakout at the level of 1108. See this consolidation period. Here it took resistance, here it took resistance, here it took resistance. Four times it took resistance and then it break out with a huge volume, huge. Look at this volume as compared to past 5 to 6 months volume. So everyone has gone who has gone long here or here. Now would we have in loss and huge loss around it has moved from 1220 to now 900 920 levels around 33% drawdown in the single stock. So how would we avoid this? How to avoid the false breakout? Now question arises is can it can be identified before, is it going to be a false breakout or what? The simple answer is no. No one can decide until and unless the price action has shown that it is a false breakout. Then what is the key to avoid? What is the key to survive in the market? Now in this slide, I want to discuss about how to avoid the false breakouts. The either by high volume. In the past examples, we have seen that high volume by deciding looking at the high volume and price action, we cannot decide that it is a false breakout. Then what is the key? The key is risk is to reward. Risk is to reward is very important. Until it is around 1 is to 2, 1 is to 3. 1 is to 2 is a very nominal risk reward. We cannot, if we want to be a successful in a stock market, then 1 is to 2 risk reward is not enough. We have to look for 1 is to 2, 1 is to 3, 1 is to 4 the type of risk reward. So if you are maintaining these 1 is to 4, 1 is to 3 risk reward, in the long term you will be in profit. So let us see uh, how we can avoid these false breakout using risk reward. So before taking any position, we have to define where you will be exiting the position if it is going against you. So that is the key to trade the breakouts. So let us move to the last examples and we can see this.